Hey, my name's James Nicholson. I hope you are well. And in this video, I want to talk about mortgages. What is going on? You see, the mortgages are the lifeblood of property investors. Without a mortgage, it makes life that little bit harder. So before we jump into that, while you're here, I would like to thank everybody for getting us to 3,000 subscribers on this channel now. It's absolutely incredible. We're making new content every single day. We're getting 50,000 of you watching our content every single month, which is absolutely insane. And now we're on the journey to get 5,000 subscribers. And I'd love to ask you to help us get there. So if you haven't done on this video already, smash that like button there. That really helps get more views for us. So please do that. And do subscribe and hit the bell notification. Go and do that right now. Subscribe and hit the bell and know that you could be the one person that tips us over to the 5,000th subscriber on YouTube. So, mortgages, what's going on? Well, it's been doom and gloom for the last few weeks. I've just jumped on Money Supermarket, the comparison site, and I tell you something, it's looking a lot better than it did. And we're going to go through some rates on here today and just see what options there are out there. Now, why is this all happening? Well, I'm sure you know about something called inflation, right? Maybe you didn't even know that word a few years ago, but now it's on the tip of our tongue. It's constantly being discussed on the news and even at private dinners now, sadly. So look, inflation sits at 10%. This has been caused by the pandemic. The government printed so much money to get us through that, which they needed to do, in my opinion. But now we've got this war going on in Ukraine. We've got an energy crisis, which is driving up all prices. You think if you own a pub, you need to pay more for your heating. That means you've got to charge more for your beer and your food. If you're a manufacturer, it costs a hell of a lot more to run that manufacturing business. And so those costs get passed on, which we're finding in our supermarkets, and fuel even costs more as well, which is crazy, right? So how we normally beat inflation is we raise the interest rates higher than what inflation is, and that knocks it down, and it's not fun at all. So in this instance, we would have to hit 11%. Now, the Bank of England's decided not to do that because this inflation is slightly different to normal times, mostly being driven by energy, which is out of our control. We're not going to spend less on energy just because they whack the interest rates up. So they are raising the rates. We currently have a base rate of 3% here in the UK, which is a lot higher than it was a few months ago for sure. And we've had 6 consecutive meetings with the Bank of England where they've just kept raising the rates again and again and again, which isn't ideal. So what happened is then we had a new Prime Minister. And so the new Prime Minister came in and we had a mini budget, which was a disaster. And so the markets then predicted that the Bank of England would have to raise the base rate to 6.5%. You would be paying a few percent on top of that, which means you might pay 9 or 10% for your mortgage payments. Now, if you're on an interest-only mortgage, that is bad news. That is very, very bad news. And so 6 months ago, I was telling people on this channel, you should fix for 5 years, because this was coming, right? We saw this coming from a long way off. You should fix for 5 years. Now, the problem you've got if you didn't do that back then is now the rates are so high, what should you do? So once we had the mini budget, the banks freaked out. They stopped taking new applications. They whacked up their rates to crazy amounts. A lot of people, when the headlines were talking about 6%, 7% rates that they were seeing, and that meant that people were freaking out. Now, I watched the full debrief from the Bank of England. I didn't just watch the Sky News that said, you know what, the Bank of England has increased the rates. Actually listen to what the Bank of England said following their monetary policy meeting a couple of weeks ago. And they said that the rates are not going to go anywhere near 6.5%, and the market is wrong. And they don't tell you where it's exactly going to go, but hinted that it would be more likely that the base rate would hit 4.75%, which is way down since the mini budget. They also said that they expect that the rate reduction or forecast would be passed on by the mortgage companies. Now they've had time to settle and see what's going on, and that would be really beneficial to us going forward. And they felt that rates would actually, even though they just increased them by 0.75%, that the rate that we pay would actually go down. So let's see what's going on, right? So I want to talk about, and look, I am not a financial advisor, just to be very clear. So you need to go and see a mortgage broker. But I can share with you the data that's there and you can make an informed decision yourself, right? If you didn't like this video yet, give it a like, guys. That really will help me. Let's get to these 5,000 subscribers as quick as we can. So 100,000K, which I've got in Money Supermarket here. This is what we're going to borrow. I've said the house is worth 150. And so what we're looking at here, firstly, is variable rates, which sounds a little scary when you think about what potentially the rates could go to. So this means that if the rates go up, which they are going to go up again, that your mortgage would go up. So you might get a new deal and the next month the deal is even more expensive. But let's just look at what you're getting today. So the Bank of England base rate is 3%. So let's put that over here, just so we can see. Now this is really interesting. The Mortgage Works right now have a 2-year tracker mortgage, which you need to check that you might be able to leave, where you can get 3.19%. That's crazy. So their margin is like not even 1% on that mortgage. And so if you've got a 100K mortgage, the monthly payments on that are 266, which is pretty good, right? I'm liking that. So if you looked at that as an option, which some people are, then you've got that flexibility. If the rates, you could save money now for maybe 6 months while the rates are still going up, and then maybe swap onto a longer product there, or take the gamble that the rates might come back down, which is also some sort of option there. So that's the best 2-year tracker. Let's see if we put this into 5 years. So if we go for 5 years on a variable rate, the rate goes up more to 4.49% because they know that the rates are going to go up, right? So 4.49%, 2-year variable, 5-year variable goes up to 4.49%. Now, I probably wouldn't want to be on that for too long, if I'm honest, but that would mean the payment will be 374. Right? So that's an option, right? Variable rates could be an option. Let's look at some fixed rates. So let's look at a 2-year fixed. What can I get for that? Got to keep updating this site. Okay, so 2-year. Sorry, I've got to undo the filters. Okay, so 2-year fixed. So 2-year fixed, there are rates today at 4.49, exactly the same as what the 5-year one was. So we'll be paying 374. 374, which is pretty good, right? These are on interest-only mortgages. I only talk about interest-only mortgages because this channel is for investors, and this is what an investor would be using, right? So 2-year fixed for 100 grand borrowing, 374. That's still so cheap, so cheap. A lot of money there you're borrowing for just £374 a month, which is crazy, right? And so that's 4.49. So that's a fixed rate deal. They're telling you in the news that the rates are 6%, 7%, but they're not. They've come down since then. Let's look at the 5-year deal and see what we can get there. Okay, all of these deals are pretty much with the Mortgage Works, apart from this one with Paragon. 5-year fixed. Now the rate for 5-year fixed is 4.99%, and the monthly payments are 416, which is still pretty good, right? So what we're saying here is we can get that certainty for 5 years, which is what some of you want. right? Now, this property, 100 grand property, could be rented out on Airbnb. It could be rented out as an HMO. It could be rented out like just as a single let. Single let property would probably get 650 now. So you're not making loads of money there, but if you're on the variable and you took the gamble, you are making a fairly good income from that there. So in summary, the mortgage outlook, you must do what's right for you. You must get some independent financial advice. That's very, very important here. But what I want you to understand is the headline rates that you see in the Daily Mail, the Sun, wherever you read your newspaper, they're going to be the worst case scenario. There are some good deals still out there, and you can give yourself that predictability and certainty. Now, this is interesting, right? Because these deals are better than the deals prior to the last interest rate rise. They're better. So the interest rates went up. The Bank of England's base rate went up, but the deals went down in price. And that was because the market understood that the Bank of England gave us the guidance that the rates are likely to not go as high as what they are expecting. Inflation is starting to come down in America. We will start to see that too. And that's going to be a positive thing. So let me know your thoughts on this. Do like the video, subscribe, get us to those 5,000 guys. Comment below with your opinions and come and join us in London. We're running a live event. It's going to teach you all about property investing, strategies that can work in a recession. This is the opportunity of a lifetime. You all say that you want to get properties when they're cheap. Well, look, the market's turning, so that's an opportunity, isn't it? So in the description is a link. Fill in your details, and then you'll get all notified on how to get a ticket to my live event very, very soon. That's it from me. I'm James Nicholson. Stay blessed and check out all my other content on the channel right now. Thanks for watching. Bye for now.